Hey everyone, welcome back to Corporate Decoder, the place where we decode the stuff Wall Street wants you to miss. Today we are diving into a filing that's a bit of a surprise, kind of like finding out your neighbor is secretly a superhero, but with more warrants and less capes. We're looking at a company called Cellectar Biosciences, and this filing is all about how they're getting some much needed cash. Think of it as a financial pit stop. Cellectar is a Delaware incorporated company, and it's reporting on some pretty important deals they've struck. They are basically getting money by issuing new warrants to people who already hold some of their older warrants. It sounds a little complicated, but at its heart, it is about raising funds. Their main thing is common stock, and right now it is trading on the Nasdaq under the ticker CLRB. You gotta keep an eye on that ticker because it is how you'll track their public performance. So the big news here is item 1.01, which is about them signing a significant deal. On the 7th of October 2025, Cellectar made an agreement with some of their existing warrant holders. Now these aren't just any warrants, these are what we call existing warrants, and the company convinced the holders to exercise them. Here is the deal. The holders agreed to buy more than 1 million shares of Cellectar's common stock. They paid $5.25 for each share. But get this, in exchange for doing this quickly, Cellectar is giving them brand new warrants, which is kind of like a bonus. This whole maneuver netted the company about $5.8 million. That's a pretty nice chunk of change, especially in the biotech world where research and development can be incredibly expensive. Now, they are being careful about all this. They're mentioning that the shares they are issuing are already registered, meaning they've gone through the proper channels with the SE. This is important for legality and transparency. They've also promised to file another registration statement for these new warrants, showing they are playing by the rules. It gets a little more detailed. They issued 2 types of these new warrants, Series I and Series 2. The Series I warrants are good for a long time until the 8th of October 2030 and are exercisable at $6 per S-share. The Series 2 warrants are shorter, term expiring on the 8th of April 2027, also at $6 per S-share. This dual approach gives them flexibility and caters to different investor preferences. Moving on, we have item 2.02, which touches on their financial conditions. Specifically, they announced an estimated cash balance as of the 30th of September 2025. They estimate they had about $12.6 million in cash and cash equivalents at the end of September 2025. It's important to remember this is an estimate, and it could change. This is good to know because cash is king, especially for a company looking to fund its operations and research. Then we have item 3.02, which deals with unregistered sales of equity securities here. They're explaining that the warrants they issued fall under specific exemptions from registration rules. This is a common way for companies to raise funds without the full burden of a public offering. We're basically saying these deals are legal and fit within certain established frameworks. And finally, item 8.01, other events. This section provides a forward-looking statement about their financial runway, which is how long their cash will last. They anticipate that their cash on hand plus the money from these warrant deals, totaling about $5.2 million, will keep them funded well into the 3rd quarter of 2026. This is a crucial piece of information for investors. It tells them that the company has a plan to stay afloat and continue its work for at least another year, which is a significant positive. Now let's look at where Cellectar stands. The company managed to raise a substantial amount of cash, which is a huge win. This infusion of capital is critical for a company in the biosciences sector, where long development cycles and high research costs are the norm. The fact that they were able to secure this funding through warrant exercises and new warrant issuances indicates that there are investors willing to bet on their future, even if it means taking on potentially dilutive equity. The company is projecting its cash runway to extend into the 3rd quarter of 2026. This is a sign of smart financial management and a successful capital raise. However, we must also consider the risks. The reliance on warrant exercises means they are essentially bringing future potential dilution forward. If the stock price doesn't perform well, these warrants could significantly dilute existing shareholder equity. The key will be how effectively they deployed this newfound capital to advance their pipeline and generate future revenue. In conclusion, Cellectar Biosciences has executed a strategic financial maneuver that should provide them with the necessary breathing room to continue operations and development. The company shows strength in its ability to secure funding and extend its operational runway. The primary risk remains the successful translation of this capital into tangible progress and market value. Alright, that is our breakdown of Cellectar Biosciences' latest filing. What is your take on these numbers and what they signal for the company? Future. Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.